What's going on, y'all? Okay, so let's get right into it. So let's talk about the anatomy of a candlestick. Here's a bullish candlestick, bullish meaning long or bullish meaning going up. It's usually green. You can change the colors of your candlesticks if you want, but green and red, that's how I've kept them, and it works for my psychology, right? It's easy to identify, no questions asked. This is a bullish candle, right? We have the open down here at the bottom, and we have the close up here at the top. We have a top wick on this candle, and we have a bottom wick on this candle. Here we have a bearish candle, a short candle, or a down candle, usually printing red. We have the open at the top and the close at the bottom, also having a top wick and a bottom wick. That's the general anatomy of a candle. Most candles have top and bottom wicks, and if they don't, you can assume that price is going to create one. All right. Now, how I like to think of candlesticks is as Russian dolls. Within one larger Russian doll is a bunch of smaller Russian dolls, right? Candlesticks are the exact same thing. Within one weekly candlestick are 5 daily candlesticks. So the 5 daily candlesticks you see here are what make up this one weekly candle. And then also within one daily candle, you have 6 4-hour candlesticks. Within one 4-hour candlestick, you have 4 1-hour candlesticks. Within one 1-hour candlestick, you have 2 30-minute candlesticks, okay? So now let's talk about trend a little bit now that we understand how candles and how the time frames relate to each other. So assume that this is a daily time frame here, okay? And we're looking at daily candlesticks. So obviously we're in a bearish trend, meaning price is continuously moving down. And let's look at this red bearish candle here. Here's the low, the break of the wick here is the low. The next candle, the next daily candle, comes down and breaks the low of that candle, never coming up to break the highs, just coming down to break the low. On the very next candle, the next candle does the exact same thing. Now, if we had another line here representing the low, could we assume that the next candle, if it breaks that low, if it's going to continue down? Yes, we can, right? We could assume that this is a bearish trend, and if we break the low of the previous candle, we're going to continue moving down. Now, if we flip that, and let's put it on the smaller time frame here, and we're moving bullish in a bullish continuation pattern or a bullish trend. So here we have a 1-hour candle, the next 1-hour candle breaking its previous candle high, and then the next 1-hour candle breaking its previous high. Is it fair to assume that the next 1-hour candle could come up and break its previous candle high and continue pushing bullish? Yes, we could. And with the next 1-hour candle, if we had 4 1-hour candlesticks here, that creates a 1 4-hour candlestick, right? And it would be one big bullish candlestick on the 4-hour. And then you have to consider, why should candles continue to push bullish, and why might the next candle reject? And maybe that's where you get into support and resistance, or EMAs, SMAs, order blocks, trying to figure out where candles react, the different zones where candles react from. Now let's get into wicks. So here we have a 4-hour candlestick with a long bottom wick, smaller top wick, and a fairly small body here. On the 1-hour, we know that 4 1-hour candlesticks make up one 4-hour candlestick. So here on the first hour, we push bearish, creating the bottom wick of this 4-hour candlestick. And then we move up, and we start moving up a little bit more, and then eventually we close here at the close of our 4-hour candlestick, right? All this wick is nothing but a range on the lower time frame, on the 1-hour time frame. And then if you picture this on the 30-minute time frame, you can assume that this 1-hour candlestick, this bearish 1-hour candlestick, is nothing but 2 bearish 30-minute candles. The next 1-hour candlestick of the 4-hour is nothing but 2 bullish 30-minute candlesticks, and so on, right? So now if we look at this here, same exact thing, looking at the 1-hour time frame, this is our bottom wick of our 4-hour candle, and so is this on the 30-minute time frame. These two initial 30-minute candles making up the first 1-hour candlestick, these second two bullish candles making up the second candle of our 4-hour candle. Well, technically a 1-hour candle in this example, right? Now, if we look at this 4-hour, this is the 4-hour candle that we just analyzed. Looking at its previous 4-hour candlestick, could we say that we're in a bullish continuation or a bullish trend since we never came down and broke the lows of the 4-hour? We just came up and broke the highs, okay? Even though we printed bearish on the first two 30-minute candles of our 4-hour candle, or you could say the first 1 hour of our 4-hour candle, we're still bullish even though we printed bearish in those times, right? Never coming down and breaking the low of the previous 4-hour. So is it safe to say that maybe we could take a buy above the highs of the previous 4-hour candle? That's pretty much how I read candlesticks, y'all. I'm just waiting on the price to break previous high or previous low of a candlestick to find the continuation. If we can assume what the next 4-hour candlestick is going to do, then we can assume what the next 4 1-hour candlesticks are going to do. Okay? And that's it, y'all.